All right, good Friday morning, everyone. It's time to talk about the markets with Jim Cramer on the floor of the New York Stock Exchange. And Jim, there is so much to get through the markets.
But first I just want to congratulate Tom Farley for just a fabulous 5-year run here. And Tom's a good friend, a great guy. I don't know Stacy. I will get to know her, but congratulations, Tom Farley. Going to work for Dan Loeb with a SPAC. Dan is cool. My friend Robbie Bradle works for him for Third Point Re. And I just want to wish him all the best. He's been so fabulous and did such a fine job.
Tom Farley, president of the New York Stock Exchange, who is
moving on. All right, so now what we're faced with is the deflationary wave I've been talking about. Everyone was so concerned when the 30-year went from 2.9 to 3.1. Well, how about a little hoopla for the 30-year going from 3.1 to 2.9? And the deflationary theory that I've been propounding is really starting to happen. It's really starting to happen now.
And Jim, that inflation worry kind of started back in February.
Right.
You didn't really buy it. You said that sell-off in February was from the VIX.
That was from the VIX, and then I watched inflation get hot. It's just now that I propounded the theory after doing some work on oil, on lumber, on autos, and on freight, specifically trains. And all of these things are going down in cost. And so the gross margins for a PepsiCo, which is what I'm urging people to buy right here, right now, are rather significant. Now, don't throw away oil. I mean, oil cannot go back to the 50s. There's too much demand. But as it goes in the 60s, down to, say, 63, 64, where it would be if the Saudis and the Russians both turn on the jets, that's an interesting place to pick some up. But I want everyone to know that I think that the 10-year could get to 2.75, and everyone who threw away the home builders, everyone who threw away the consumer packaged goods, remember, oil going down reflects on plastic, and the raw cost of plastic is very significant for the Proctors and the Colgates and the PepsiCos.
Well, I'm glad you mentioned home builders because Toll Brothers was hit from worries about high mortgage rates. And now,
bingo.
And now we're
bingo.
What happened to that?
Well, it's Toll Brothers is a buy when you see rates go to 2.75. Until then, you got to be careful. Only because mortgage rates haven't come down yet. So, I mean, if you were to ask them right now, mortgage rates just went up. So mortgage rates don't just go down in a second, but it will happen, and you want to anticipate that. And you need to see that the WTO case go against the United States. You can't just do it with mortgage rates. All
right, let's move on to some individual stocks. Foot Locker shares surging over 10%. Is it a buy up here?
Nike's a buy. Under Armour is my favorite. Under Armour is a buy. When I had Kevin Plank on recently, and the stock was at 15, and he made a pledge that things were going to get better, the inventory's going to go lower, orders going to go up, and that's clearly the case. We know that from Kohl's too. Kohl's spoke very positively about Under Armour. So Foot Locker's going to go higher. They have a lot of cash. I do like others better.
With Foot Locker, was there worry about Amazon in the past getting into apparel, something like that?
No. Foot Locker's mostly the issue had been the mall. And I think that the mall is, the reason why it's not as much Amazon is because you have to try them on. But Foot Locker, like L Brands, which reversed yesterday, there is a theory going around which the mall isn't going to be that bad. There again, the mall is somewhat related to gasoline, but it's also a survivor bias. There's been so many stores that have gone out that the ones that are left are doing better.
Here's a stock we don't talk enough about, Intuit.
Intuit had a fantastic quarter, and Brad Smith is a remarkable executive. They were looking for 4 to 7% growth. They got double that, and I think that it's a buy right here, even though it's moved up.
And it seems like they have some runway. The CEO told you that 40% of people still use spreadsheets.
Yeah, I mean, so there's a tremendous total addressable market there for Intuit.
You also talked last night on Mad Money about the comeback in FMC shares. Is this stock a buy here?
The old food machinery company? Yeah, I mean, because lithium been bringing it down. Lithium's 15% of the company. The fact is they got a great gift. Dow DuPont couldn't close unless they gave away their crop protection business, one of the crop protection businesses, and that went to FMC, making FMC a very inexpensive company. 15% grower, 13 PE. No, you know what? We don't know what the P is going to be because they're going to spin off lithium. But all I can tell you is it's very inexpensive.
Jim, before we go on this Friday, is it a gardening weekend for you?
Oh, completely. And it will. My wife's giving the commencement speech at her high school, and then right to Home Depot, which, by the way, is very undervalued, and be a buyer.
Okay, we'll look for your pictures on Twitter.
Sure.
Jim, thank you.